What's going on, people? It's GBP baby. Welcome to Backtesting episode 2. This was what we did last time. Last time we were here, we're still on Euro USD. I've actually got an entire week like marked out already for us to be looking into. It took us about half an hour last time just to get through one day, so it looks like we're going to be taking our time with this. But again, if you just sit back, relax, watch it, I'm sure like you'll pick up something here and there that you can be applying to your charts in the future. But yeah, we're just going to get straight into it. And cool. So you can see here, as we went into the new day, we traded lower, manipulation, what we're trading into, fair value gap left behind in this range. And also it offered us a premium, so a discount, sorry, for us to buy into these highs here. So we're going to make that blue, call that FVG. And I also want to mark out the fact that this is at the midpoint. This is below the midpoint of the previous range, of the current trading range. And you can see our price treats that level, 9843. Hope everyone's doing well. Hello to all my new subscribers. Again, these episodes, I can imagine they are going to be very boring, so compared to my daily analysis, but useful nonetheless. So let's not forget. So I'm going to drag this out because you see our price even bounces off it here. Let's move this to the left, right even. There we go. And then we'll get right into the depths of things. As we traded here, we traded down into this and then left, and then we found support on this level here. When I see stuff like, again, this looks like a, what do you call it? I wrote it down. I forgot what it's called. I keep forgetting the name. Immediate rebalance of price. When price trades down into the previous higher wick. I believe that's what we're witnessing here. I'm not actually sure. However, I'm going to assume it is. So I'm going to draw that out. And we'll make that purple, and I'll just leave that like that and call it immediate rebalance. And we can put that at the bottom to the same happened here. I'm just trying to look for entries. We are on the 5 minute. It would be good if I could go down to 1 minute, and I can, but doing that would mean that it will take us back to where we are now, which is most recent, and I don't really want to be doing that. So I'm not going to risk losing our position in the charts. Right, so we have fair value gap here for an entry. And again, we do want to be buying, to put in the buy signals. So I'm going to just get this from here. This is a buy, I believe, on the immediate rebalance as we trade into this. And we're expecting high prices. And then we can sell above this high. Save as buy. Cool. So we trade lower. We have a break in market structure here. when we start running down, so that means we're looking for some kind of swing low, which we have here. This will be sell side. Which is where we'd want to let go of our stops. Or buy again, carry on buying. We have a fair value gap here, and then this order block should act as support, which is what we see happen here. We trade into the order block because we took out buy side here. If we never took out buy side here, I don't think we would have traded into this order block, to be honest. And it's recognizing things like that which enable you to have a nice clear picture of how price action should perform. And we can see later on that day, this order block turns into a bearish one, so that is an inverted, but we'll come back to that in a bit. So when price leaves this level, we have a gap here, and I guess that's a breakaway gap. I'm going to call that a breakaway gap because we didn't trade back to it. And then what highs we run into? We should be running into some kind of liquidity. Of course, we're running into this liquidity resting up here. But I'm not going to worry about what's going on over there. We have a fair value gap here, but we also have a breaking structure. So when price trades into this, we shouldn't see that as a buy because we've seen a breaking structure to get there. This could be a buy, but us trading into it like this is not really a safe buy. But yeah, you also see how we trade to 50% of this before breaking through it. 1.09962. Oops. We also had a breakout market structure here, and you can see our price, when it trades through it, it disrespects it and then leaves it behind completely. Doesn't want to come back up here at all. We actually traded the 50% of this wick, which is interesting. I wish I fully understood why it does such a thing, but I guess with time I'll start to understand. But it's just interesting when you recognize it's doing things like this constantly. Like this trades the 50% of this wick, but I guess if this is a range and you draw that out, we traded through it, so now it should act as, like, I guess if we look at it as a range, because wicks are ranges too, as a fair value gap, we should trade to the 50%. If we traded there, let me start again. Wick should act as ranges, just like fair value gaps. So if we draw it out like a fair value gap and we trade through it, which we did, we should then trade back into it, giving us one last offer before breaking lower, because it should go from premium to discount. So I guess you could say that's it, not premium to discount, bullish to bearish. So you could see that as an inverted wick maybe, or something along the same names. I don't really want to slap names that aren't existent, but I see that having some kind of relevance, so I'm going to leave that there. So this will be when we traded back, as we traded through this, price returned to it after we took out sell side here. And we had relative equal lows resting here. There's our breaking structure. We have a breaking market structure here. We get our third entry here, and also to the 50% of this wick. Which happens to be 668, but 667. So it didn't completely trade to it, but price still stayed above this. It's acted as support, so this should have been seen when we saw this first candle trade here and leave. This second candle trading back down should have been our buy. In fact, I keep forgetting to put our setups. So after this breaking market structure, when price trade back up, we'd want to be selling there. And then we can let off our stops below sell side liquidity here. And then finally, we can let off stops here as well. You also want to be buying from here. And then you could be letting off stops here and in this inverted order block. How long we've been going? 12 minutes. Cool. But you can see that this was just the London session. We traded higher, made the high, manipulation, left, came back down, and at this from here, this range from here to here, I see that now as a fairly traded range. We traded up, down, and then we kissed it, so we should expect low prices. And then of course we have a reversal later on in the day, but we'll get to that we'll cross that bridge when we get there. Alright, cool. I can imagine there was a nice entry here for this low, because we have a breaking market structure here. This is a change in the state of delivery. As soon as we see candles trade down like this past the order block, this is now changing the state of delivery. So price shouldn't want to go any higher than this last candle, if that makes sense. Wow, even of this. But again, we're only on the 5 minute. 1 minute would be potentially probably a lot more clearer, to be honest. But that's break of structure here, and we also have another break of market structure on this as we viciously attack these lows and this sell side here. So when I see break like this, when I see constant break, like I'm expecting lower prices. So when I see lows like this get formed after these breaks, any retracement up, I'm expecting these lows to get tagged, and we can see later they do. So it's recognizing these things which allows us to understand, I guess it's order flow, isn't it? Sell side. And then we have a breaking market structure upwards here, and that's when we have a shift. As soon as price aggressively trades higher, taking out a swing high, a short-term swing high, which it does, and then from then on we trade higher and back into this. But this is short term. Why is it short term? Because overall we want to get lower and take out these stops completely, don't we? Because that's what happens here, but we're not going to get into that right now. And also it's classic that between 5 a.m. and 7 a.m. we have some kind of retracement on to set up for the New York session. So seeing us retrace back into this area, specifically into this bearish order block, is pretty classic price action. So since we have a breaking structure here, where would we want to buy as soon as price comes down and retraces. So there. We also have a bullish order block here, and we see our price remains within it. Yes, it wicks below, but it all stays within there, so that's supportive of the higher prices. Then we eventually leave. We also have another break, another short-term break here. And then as soon as the 7 o'clock bell goes, we start moving higher and trading through this massive fair value gap quite aggressively too, tagging it and coming back down through it. And you can see it has a lot of resistance getting back through it. Got relative equal highs here as well. So when price pushed up here but failed to take out those highs, and when price came back down, we can start to assume that it's likely going to want to go into these highs, which will give us more confidence as to why we want to buy. Whew. Break of structure, and you'll see that we have this inverted fair value gap, traded through it, bullish, traded down, bearish, and now it continues to act as a bearish fair value gap. Yes, we trade into it, but we don't disrespect it, giving us more reason as to why we're likely to have lower prices and wanting to go into these lows here. So we could be selling here, and and I'm not saying that doing this is going to let you be able to trade in live charts. Like, doing this just helps, because at the end of the day, backtesting is done with anything in life. So being able to understand price action from the past will allow us to start to frame it and see it happening live in our charts in the future, and help us read a lot more clearly about where price is likely to draw, especially considering it's fractal, meaning that it can be disposed into any time frame. What I recognize here is that we had a sweep off lows here, but then we failed to take out this high. So I'm going to draw this box out completely. I want to draw attention to this area here, so let's make it thick. And I'm going to make a circle around this. And I'm going to type immediate rebalancing here. Oh, then again, actually, is it? I guess it's not, because there's a fair value gap, so ignore that. But I guess we have a break in market structure here. And then, of course, we're looking for this outside liquidity resting here. Excuse me. We also trade 50% of this, of course. $109,595. Excuse me. Wow, I'm tired. So let's see what else we got here. We've got another fair value gap. See price respects 50% level again, showing support, and also trading to a breaker. Swing low, swing low, swing high. So I'm going to mark that out as a breaker. You see how volume sticks around that breaker. Breaker here. Then we consolidate for a bit and then leave the range. Because this area now from here to here has been traded, so we touch it and leave it, and then obviously start looking for higher prices. Got another break here. So it's likely that price shouldn't really want to come back below down here. Like there's obviously a fair value gap here as well, which should act as a perfect buy in the near term. Wow, price didn't even return to it. I'd love to know when price came back down there. Yeah, that's crazy. I know this is a bit off topic, but you can see as soon as we turn back to it, look what happens. Perfect buy for higher prices. Interesting, right? Anyway, you can see our price respects that fair value gap. And then we just have Asia to do, and then we're pretty much finished. We have a buy side liquidity resting here as well. So this was a very bullish day by the looks of things anyway. And you can see the different levels of buy side here, buy side here, buy side here. And you can see our price just runs to it, once takes it, pulls back a little bit, offers another entry right here. And to know that this is a good entry, you have to look at the complete range. You can see that it goes below 50% level, then we trade back through it, find support, and then leave it. Like this classic price action, you know. Trade into this bearish order block, which happens to be in this fair value gap. So like, price just stacks, really. Price just stacks. So once price came into this fair value gap, this order block is now the one I'm looking at. So let me try and explain this nice and clearly. So we have a fair value gap that we leave behind. Price is clearly respecting it because it doesn't want to trade in there. We then take out more highs, come down, respect this fair value gap. So now this should be acting as support, and this bullish order block should act as support as well. And then we can see our price respects that as well, dip into it, and then we continue higher. So like, this is what I mean by price is constantly respecting these levels, because it doesn't even want to come down here no more, because it's constantly stacking and defending anything below these levels. Got a little inverted fair value gap here. I do want to try and name everything. Like, I'm going to call it a stacked order block. I think there's a proper name for it. I think it's like a proportion block, but we're nearly finished now, and I want to get this video finished, so. So Asia, we come down. It trades into this, doesn't it? This bearish order block, which would class as a breaker. Swing low, or you could see this as a swing low, and then this is a swing high. Swing low, swing high. Like this is the swing high, which we were referring to before. Taking off and going higher. Clear breaking market structure here. And when you see a breaking market structure like that, again, price shouldn't want to go any lower than within this range again for a while. Like this range shouldn't act as support. So when price comes down to it, like here, to the breakout structure, this is a nice entry. Where am I? I keep forgetting. I want to be letting go of stops here. I want to be buying in this breaker here, and I'd want to buy in this fair value gap here. So there's so much opportunity. It's just a matter of being awake, knowing the daily bias, and seeing where price wants to draw to. And also trading at the right times, like between this and here, you can see it's very consolidated. Like you wouldn't necessarily want to be trading in that. You want to be trading in the kill zones, which would be here, obviously, London, New York, London close, and then Asia. And then Asia runs up into this area here, but I'm not gonna talk too much. So that pretty much brings us to the end of that video. We hit 30 minutes perfectly. This has been GBP baby. This is Backtesting episode 2. And I'll catch you in the next one. And I'll send the screenshots again, same as last time. Peace.